Alright, good morning. Let's go over today's trade plan. So in the overnight session, ES balanced in the upper half of yesterday's range and actually tested above yesterday's high as well. So right now we're going to be using 61.5 to 63.5 as the micro bull bear zone. Our short-term bias is going to be bullish as long as ES holds that zone. And on the upside, we have some resistance here at 67 to 68, which is the short-term balance area high. But if we can break through this and we hold above micro bull bear zone, then we could get a rally, a breakout up to the 76 to 78 initial resistance. That is a high odds target, and we expect some rotation there at 76 to 78, but it's not a spot that necessarily has to shut off the buying. So it could be a scenario where if we get an upside break, we go up to 76, 78, put in a rotation, balance a bit, and then head higher to the 81 quarter to 83 quarter resistance zone. So, it's a good spot to take profit, but it is a bit riskier to short the 76 to 78 area. Now, if the other markets are also hitting some important resistance, then it could still produce, a 4 to 5 point rotation, but it's not this high odd spot where you absolutely have to enter short. I think it's a better area to take profit on longs because a directional breakout could take ES higher than 76 to 78, and you don't necessarily want to be fading a directional break, especially after the market has balanced and is breaking above a very important resistance area, which would be the 67 to 68. So the overall idea today is that we're expecting, a directional move outside of this recent 1 to 2 day range. It could be to the upside if we hold the micro bull bear zone, but it could also be to the downside. So far, the markets are holding up quite well, and the signs point to an upside break. But in the event that we get a downside move and we break and hold below 61.5, we would be targeting a move down to the 48.5 to 50.5 initial support. And again, we expect rotational activity there on first test. We do expect responsive buyers to be active there on first test, so it's a good spot to take profit on the short side. But the selling does not have to shut off by initial support. If it's a strong directional move and the internals are indicating more of a trend type morning, then we could head lower all the way down to potentially the 39.5 gap, the 41 support. 36.5 to 38.5 would be quite extended to the downside, but 41 area, 39.5, those are potential downside objectives. Now they are extended. They aren't like the high odds targets on the downside. 48.5 to 50.5 would be the high probability target on the downside. But every level below that could technically still get hit if the momentum and the internals are indicating a strong downside move. So in that event, it might be worth it to hold the short a bit longer, and at the minimum, be careful on the long side, right? Be careful fading a strong directional move, whether it's to the upside or downside. But the only time you really want to consider fade setups is when the market gets overextended in either direction, right? So on the downside, that would be closer towards the 39.5 gap, 41 support, maybe 44 to 45. On the upside, that would be closer to the 81 quarter to 83 quarter or the 87 resistance level. So the main theme today is to trade in the direction of the break, whether it's to the upside or downside. Fading the move is going to be the high risk trade setup. So the idea is to go with the breakout. Of course, we are going to look for signs that support the breakout as well. We do want to see some rising advanced decline lines. Want to see some good momentum on the upside, a pickup in volume. But from a price action perspective, you're getting a break above 67 to 68. That's not a fade setup at all, right? Because you would be breaking above a pretty established range, and that can trigger, just based on short covering, that can trigger a pretty strong move to the upside. And anyone who tries shorting it, I think, is just going to have their stops run, and that's going to create even more upside momentum. And it's just going to elevate the prices even more and probably take us up to 81 quarter to 83 quarter eventually, because everyone who's trying to short is probably going to continue to get stopped out as the market moves higher. So you don't want to be caught on the wrong side. If you're getting a breakout, momentum's good, volume's good, internals are rising, that's not a market you want to fade or short. So try to hop on board the breakout move. Of course, you still want good reward to risk. You still want good trade location, but at the minimum, you want to avoid shorting that kind of move. So until the market clearly tells you that it's failing, that's the only time where we'll consider shorting the pops. But aside from that, as long as we're holding above 61.5 to 63.5, above the 64.5 HVN, shorting is a risky proposition. So again, just a quick recap, expecting a directional move, whichever way that is, that'll be the direction we focus our trading in. The main catalyst this morning is the existing home sales at 9 a.m. Central, but we could get a move even ahead of the econ release. So those are our main ideas. Let's see how well the buyers hold the market here at the micro bull bear zone, and we'll take it from there.